Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Alex Coffey, market strategist at TD Ameritrade, to discuss technical levels to watch in the Nasdaq 100. Alex, it's great to see you as always. Welcome back to Trade Talks. And since we met last, we've seen a lot of movement towards the upside in the Nasdaq 100. Give us a fresh level to look at.
No doubt about it. I actually, of course, have been on here. We've been talking sort of that stoplight price levels on the Nasdaq 100 for what felt like over a year. Well, things have changed drastically in the last month and a half or so since the last time I was on your program. Glad to be back and good to get a little refresh look as we take a look at the Nasdaq 100 chart. Of course, I left those old price levels on there just for context and how far this rally has extended after breaking through that 13,500 point mark. And we've kind of narrowed down, though, over the last, let's call it 2 weeks here, as earnings season has really kind of hit full force, between about 15,250 and about 16,000 of the upside. You can see I extended this chart going all the way back to January 1st of 2022. So it captures a great deal of trading activity. That's how far back in time now we have to really go to get to relevant price levels outside the last few weeks. And you can see that level on the downside by that lower kind of dashed teal line at 15,250 represents a level that we saw late March, early April, when the kind of Fed was kicking in, tightening for the first time back in March of 2022, a relevant level going back in time. And of course, 16,000 just above here, big round number, is certainly an area to watch, especially post Thursday afternoon with Apple and Amazon earnings on deck.
And if we take a look at a chart of the Nasdaq 100 Volatility Index known as VolQ, I'm sure it's an inverse picture there.
No doubt about it. And you can just see what I thought was quite interesting is we've been talking about, even going back the last couple of months, that volatility had really come out of this market. So much of the risk was somewhat understood and face up, if you will. The geopolitical risk had certainly, the sort of fever pitch of that had subsided over the last year. Of course, inflation seems to be working more into a disinflationary environment, at least from runaway inflation. And even on the earnings and kind of economic activity standpoint, kind of the peak fears of bank failures and recessionary talk that we really kind of accelerated in late March of this year have also somewhat subsided. We haven't really seen a lot of disruption in the regional bank space in several months. Earnings are largely surprising to the upside. I think the last check I had was like 83% or so were positive beats. And so really a strong earnings in terms of relative to expectations thus far. And so that's really been the theme from an economic standpoint. Well, what does all that lead to? Well, that leads to lower and lower implied fear and implied volatility. And we see that represented here by VolQ.
And you know what stuck out to me, Alex, is the heat map that we see here today, because part of the concern was that there's a high concentration in stocks that are moving the indices higher. And if you take a look at for the one today, it really shows that it's broadened out.
Yeah, it really has, but still relative concentration is still a major part of these indices. Of course, the rebalancing did a really good job of reducing that by bringing down those weights of those big seven names that had really ballooned. But you can see with those names, majority of them in red territory, from Alphabet, Tesla, Amazon, even Apple kind of lingering around that mark down slightly, about 0.5%. It's just difficult for the Nasdaq 100 or even the broader S&P 500, to be fair, to really get its feet under it. It's not a big down day today, just marginal, but those names do carry a sizable weight, especially with their earnings, like I said, lingering on deck from Amazon and Apple on Thursday, likely to settle the score, what's been relatively a draw so far amongst those big names. Microsoft, Tesla, Netflix, all lower, but Meta and Alphabet, pretty monster moves to the upside.
All right, Alex, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.